Welcome to this week's edition of Money Matters. My name is Malcolm Sime. Now, as the world's currencies continue reeling under the stress of a very strong US dollar, we continue with the grim implications. But now, did you know that money lending can be serious business? We profile one of those. This and more coming up on Money Matters. So even as a few Ugandan firms are taking advantage of the East African integration effort to spread their wings across the region, several regional players, especially those from the Kenyan market, have moved fast to seize the opportunity. Now, riding on this development, one of Tanzania's insurance players is joining the Ugandan market. We spoke to K. Krishnan, the managing director of that insurance firm. Mr. Krishnan, it's very nice to have you on the show. Money Matters. You're most welcome.
Thank you.
Very good. I know you head Alliance Insurance and you have a regional footprint in Tanzania, Uganda, and other countries. Just give us a bit of a digest on who you are and what you represent as an entity.
Alliance Insurance is a homegrown East African company. Way back in 1998, Hanover Re founded this company along with majority shareholders, Union Trust Investments in Tanzania. Since then, we have grown from strength to strength. We are one of the top two companies as on date in Tanzania. In our 17 years of life, we have remained within top three companies for the past 10 years. We were initially a composite company that is selling both life insurance and general insurance. At this point of time, we are a composite holding company, that is, the holding company writes general insurance business and our subsidiary Alliance Life writes life insurance business.
Okay. Now let's look at your motivation to join the Ugandan market. Why, of course, make this move, but then why now?
Okay. See, as a matter of fact, we all know that all these countries are moving towards East African integration. So it would be not right on our part if we don't embrace this movement. That's the first motivation. Secondly, all these countries are developing at a much faster pace. Financial sector reforms in these countries are taken off. And there is a need for insurance services. And there is a need for quality services. I would rather expand in our region as a part of East Africa rather than going elsewhere. So that would be my first objective. That's how we are here.
Now, you mentioned a very critical development within the region. That's the East African Common Market or integration process. Just for purposes of our viewers who may not be able to draw their knowledge between insurance and the community, help us understand the contribution that insurance plays, in enhancing or supporting, the integration process or the common markets, if I may single that out.
See, the first phase of integration is economic integration. That's how you could see a lot of developments took place on the custom area. Insurance is an essential part of your financial sector. And insurance plays a support mechanism for industries. You would already see a lot of commercial entities are crossing borders and having commercial enterprises in these 3 to 5 countries. Most of them are our clients. So We don't know whether they are chasing us or we are chasing them, but as a true player in the finance sector, we feel that we should play our role in wholeheartedly adopting East African integration.
Now, Uganda is an agro-based economy, and agriculture, despite the fact that it's the mainstay of the economy, we've seen the industry not making serious headway in that direction, whether primary production, whether anywhere along the value chain in agriculture. Do you have any particular focus or arrangement or package or strategy to see how you can probably go into that area?
See, you're right, and I think you shouldn't, none of us should blame the country or any industry for not giving agriculture its due. I think it's the way things are. Yes, in developed countries, agricultural insurance is very important and normally bought. Whereas in developing economies, a farmer feels very happy if he can sell his produce at the end of his cultivation time. Insurance is the last priority. That's where one needs support from international bodies, government departments, and insurance as well. From Alliance point of view, what we would do is, by ourselves, we will be talking to the people with whom we are dealing, that is brokers, bankers and other people. If there is going to be any request for alliance any request for agricultural insurance, please bring it to us.
Thank you very much. Thank you. It's been nice talking to you.
Likewise. Thanks.
Thank you.
So the increase in service providers leaving their dues in dollars is turning out to be a major disincentive to millions of people. That's made worse by a weakening shilling. Cases in point include payment of rent, particularly in shopping arcades, taxes, some utility hotel services, among others, which are hinged to the prevailing dollar market rate. Should the dollarization of the economy be discouraged? That forms our Insight segment this week.
Struggling business owners across the numerous shopping centers within the city are bearing the brunt of a high exchange rate to the dollar, under which they pay their rent.
We don't see why landlords should charge us in dollars. And worse still, when the dollar goes down, they put a ceiling. They start charging us, saying that you cannot pay below that. But when the dollar starts rising, they don't care about what is happening. And this is really making us almost run out of business.
And even as the local business community and the public at large continue to experience a shed in value of their earnings, the civil society budget advocacy group are also concerned.
Kids have come up, everybody's charging in dollars. You're putting a pressure on the dollars. Hotels, everybody's charging in dollars. Consultancies, everyone's charging. Why? Simply because people don't want to hold our money. They feel the value of our money will not be the same in the next 3-4 months to come. And when people lose confidence in your money, you have all these volatile exchange rates.
But property managers admit this challenge to commercial and residential tenants, reasoning that the local currency does not shield them against expensive capital.
We're in a free market economy, and Uganda is one of those markets. That's a government policy. Government can determine that we use a shilling, but is it practical? So that's one of the good things of investing in Uganda, that you can charge in dollars and Uganda shillings.
At a meeting convened by the Kampala City Traders Association this Tuesday, the business fraternity cited the tax body as one where they have to contend with variations.
We are getting challenges, especially when they convert because even when they work out the weighted average of this month, it is still up there, and we are getting a lot of challenges to clear the taxes.
However, Uganda Revenue Authority says that they use a weighted average to achieve the applicable tax rate, though hinged to the dollar.
We do not change the rate on a weekly basis or daily basis, but rather we set the exchange rate for a month upfront. And the process that goes into setting the exchange rate, we look at the statistics from the Bank of Uganda and come up with an average exchange rate that then we apply across.
All the same, Bank of Uganda is of the view that a liberalized market, where the dollar is widely floated, such as in here, has a far greater advantages.
The principle remains of making sure that whatever kind of business you're involved in, you must be aware of the risks, and you must put in place a framework that can help you hedge against the risks. Foreign exchange is one of the risks. But as I've said again, because in Uganda for the last 2 or 3 years, inflation has been low and stable, there's no cause for people to largely prefer foreign currencies.
These constraints facing the expenses paid in dollar against the shilling are coming to the fore as the local currency continues to lose its strength to the dollar, trading at 2,952 and 2,990 on average for buying and selling, respectively.
The safety and quality of milk packaged in pints is until now not guaranteed, save for a few processors that take quality as a priority. Now, with the increasing number of milk processing plants sending milk on supermarket shelves, it is important to look out for the required standards for this sensitive commodity. All coming up in Consumer Insight. Widely sold in supermarkets and retail shops, also a highly delicate perishable that is used to feed babies calls a question on its handling before it makes its way to the breakfast table. The National Bureau of Standards has standards that cover pasteurized milk, UHT and yogurt. But what does it take to get certification for processing this product?
You must ensure that you're actually able to package this milk and keep it fresh for consumption for a specific time, depending on what product you're making. So even the packaging material is all part of what we regulate. Are you actually allowed to use this kind of packaging material for the milk? Of course, our monitoring, as most people are aware, we do it on an annual basis, but throughout the year we are collecting samples so that we have to renew the certification every year. So they have to show consistency in meeting the requirements outlined in the standards.
Packaged milk producers are required, as a must, to have specific facilities at their plants.
We did receive a directive last year that milk producers must have 2 labs. A lab for testing the raw product and another lab for testing the finished product, the processed and finished product. Now, most of our certified companies have either already got those 2 labs or have begun the process of making sure that they have 2 separate labs. So this is all in effort to try and make sure that the quality of the milk being processed is being monitored.
It's also common that majority of products sold in supermarkets across the country make it to the shelves with no standard certification.
And this is a product that is covered by compulsory standards because of its nature. I mean, if you want to make people sick, you can do that very well by producing milk that is not being monitored. So we are very uncomfortable with packaged milk that is not certified because it means we are not aware of it. Because our certified companies also have enough labeling information, they can easily be traced. They have taken the time to do what is right as indicated in the standard. A lot of people who just write a name and maybe even a phone number doesn't help me. How do I trace where this thing was made? You actually have to put an address of where it was made. I should be able to actually walk up to that place and say, this is where they made it. So having just a phone number is not enough, it's not sufficient, and it's not allowed.
And in order for milk to be consumed while still in good condition, a number of things must be observed.
So, and remember, there are also issues about handling. Now, the sensitive nature of this product, and if it's not handled well, which involves now the people who are presenting it for sale. This is why we are involving even the supermarkets, because you'll find the manufacturer has done a very good job, and then how that product is handled before you, the consumer, comes to buy it is what causes a problem. And so we are even going to be meeting supermarkets next week. We are going to come up with guidelines on how they are supposed to handle all these things.
How do you do business and compete successfully without reinventing the wheel? How do you beat off competition successfully and almost carve out a new trend of consumerism in your territory of operation? Join us as we answer those questions through the eyes of such an entrepreneur in Mbale district.
Food as a commodity makes for endless options for enterprise or business. But in the arena where there are so many players, keen insight will still get you cash if you are able to identify a gap, even when it seems not to be there. Matthias Nabotele and his friends are getting Ugandans to consume Arabica coffee as they do tea.
It is a big research. I actually traveled in Latin America, in several countries, including Brazil, and also in African countries, that is Ethiopia. The basic domestic price determinant is based on consumption, and that is why those countries are actually selling all their coffees with high differentials, and that's why we decided to come up with a domestic consumption promotion, which can also create demand for our coffees.
Their specialty is Arabica in a cup, and not doing your high-end cafe, but a coffee shop where anyone can get in. Speaking of the choice of a business model.
Say a new thing in the Nordic community, because coffee is here about 8 years, but and people have not been actually realizing the potential of its beverage status. Right now, we are impressed that most people are either trying or are used to the coffee.
The intent is to effect behavior change for coffee consumption. This is why they have added the mobile arm of the business.
As you hear the word mobile coffee, we start by moving door to door, but we also have stations which are stationary. Like we have a 24-hour unit which is along Bishop Wasike Road, and that is the only stationary 24. The rest are based on the day shifts.
Creating a consumption culture means that you must be at it consistently, especially in the food business.
At the end of the day, if there is no consistency, and then you don't really become dependable to the consumers. And secondly, it does not mean that you sell coffee even at night. You can have a night without a sale, but what is important, the point of reference, that you are, people know that you are there with or without electricity, with or without a sale, or with or without the customers.
They operate a 24-hour coffee station to tap into the travelers in Mbale. They source directly from the farmers and employ low-cost brewing and preparation to keep the cost per cup at 1,000 shillings, which fits the sort of market they target. Here is the reason their coffee concept is not high-end, but low-end. They seem to have understood from packaging right to setting a product to be aspired for and to the pricing, which is within reach. And if they keep the consistency, a coffee-consuming public can be created, nurtured, and grown.
When you think of money lenders, oftentimes you think of ruthless human beings who lend out money but also employ rudimentary means to get back their money. Alan Tayewa is a money lender that says this is the perception that he has to live with. He has, however, managed to live through it and emerge with a very profitable business.
On a typical working day, Alan Tayewa engages in the business of lending money to several of his new and exiting clients for a short duration with an interest on it.
I entered into this business as a way of wanting to save. Because I remember talking to a friend of mine sometime when I was on campus, and I told him, by the way, I want to start, lending out some money. And a week after, this guy comes to me and says, well, have you started your lending business? I'm like, not yet, but can you give me 100? Can you give me 200,000? And that was my allowance, my monthly allowance. So I had just received it, and I just got it and gave it to him. And he told me, I'll give you 40,000 in 2 weeks. I was really excited.
However, after finishing campus and trying out a stint at employment unsuccessfully, Tayewa decided he had to devise means of expanding his money lending business.
I got into partnership with a friend of mine who was working for a certain company who would bring me clients, and I take them to people who trusted me. So that way, I did two things. I got commission off that, and two, I learned the business easily. So even with the few savings that I was making, that's when I actually decided, I said, I think I can do this business. So with the few savings I would make off my commission, I would reinvest them.
It was through these experiences and life lessons that he got his enterprise Gold Mine Finance Limited up and running. Even after gaining ground with the business, he's really picky with the type of clientele he lends to and prefers to do business with entrepreneurs.
And the best borrowers are those who borrow to maybe top up on the money they have to buy things to put in their shops, to bring containers, those kind of things. And usually those are the long-term people. Those are the ones who will pay you easily and very fast, really, and they come more regularly.
A holdover degree in international business administration, Tayewa confesses that he has been quite adventurous with a number of businesses, most of which have not really paid dividends.
I've been in tourism. I have vans which I hire out. I've tried to partner as well with some friends in some other businesses. But I've had my hands burnt, and this year actually is when I made the choice to say that it's better for me not to diversify.
But with the steady returns and growth that this credit lending venture is generating, this entrepreneur is realizing additional investments.
I've been able to buy some property. I have land, in Mokono, in Chanja, in Chiwatule.
And as far as dreams and aspirations are concerned, Tayewa is building his around a very strong vision and mission.
My dream is to find a proud money lender, not to sit back in the chair and hide. That, you don't want to talk about it as your business, yet it is your business. It's not a business that you should be shy about because it's profitable. It may be even more profitable than many of these other businesses. So I want, one is to form an association of money lenders, one that's going to protect the lender and the borrower.
Having started with a capital of 200,000 shillings and a business idea birthed in his dorm room, Alan Tayewa opted to take risks that have since seen the growth of his pride, Gold Mine Finance Limited.
And now we look at the latest from the equities world from the Uganda Securities Exchange. That's it on this week's edition of Money Matters. My name is Malcolm Sime, and greetings from the team. Please do get back to us at 6565 and look for NTV Money Matters on Facebook. Leave your comments and views. I wish you the best viewing for the rest of the programs.